Yesterday, we did talk about our DXY that we were bullish yesterday and we were expecting price to push higher at least to this. Oh, I even draw this line yesterday here. Let me just show it up to your friend. Yes, I was expecting even price to push down here and push higher, right? We were bullish yesterday. However, even though we were bullish on DXY, how come we were also bullish on gold and expecting price to push higher to these levels? And this, it puts us back into a position where you simply look at different things or different scenarios for you to consider the entire bias or a whole daily bias in this case. So I want us to do the same thing here again. And the step-by-step that I used to tell the daily bias or to determine daily bias. In this case, I will try to keep it simple as possible or as simple as I can, right? We start on the dollar index. Let's remove these lines here, as well as this line. Okay, and this one we clean up here. In this case, how did we manage to get yesterday's bias correct? This is how we did that. Okay. The first thing first, we were looking at the previous 3 candles. And we realized that Tuesday here actually pushed below Monday's low, but failed to close below it. And again, this is key. Tuesday pushed below Monday's low, but failed to close below it. And then when we look at the weekly chart here, we understood that last week we had a huge move to the upside and it closed about the previous week's high, indicating that okay, on this week, we are anticipating a bullish week, at least to last week's high, or eventually to that 107.34 level. And that indicated to us, okay, that on this day yesterday, okay, the whole week we are bullish. And what we saw on a bullish week here, that the past 2 days has been bearish. So which means, and this thing here, or this candle here, this failure to close below this level indicated, okay, now we should be expecting what a reversal to the upside. That was it. And then on top of that, we added this scenario here that we had, in this case, we had a fair value gap over here. However, don't forget this, even though the fair value gap, we closed below it, this was key here. This candle here pushed below it, but didn't close below it, but this one closed below it. It closed below the fair value gap, but it failed to close below this candle. So to me, this is that, okay, yesterday, I should be expecting a bullish candle. If not bullish, at least 2 previous days high. I would say this, if not bullish to our drawn liquidity, at least to the previous day's high. And we got exactly that. So here's an issue that we are facing today. So which means that this here indicates that this low here was actually it makes me believe that this low was actually the low of the week. This low over here was actually the low of the week. First, 106.111, 106.113. Okay, this is the lowest low here on Tuesday, was actually the low of the week. And I understood something as that if I'm bearish on a weekly chart, right, I want to see price open Monday, Tuesday, or Wednesday will form the low of the week before we get that reversal to the upside. I was expecting that as well right here. And that gave me the idea, okay, we should be bullish yesterday. So let's take a look at a good look at today here. Again, guys, I didn't even show the economic calendar at all. Let's look at today. Let's look at the previous 3 candles first. What do we have? We have yesterday here. Yesterday was Wednesday, price push higher above Tuesday's high. Did we close above it? Let's key the high right here. I'm going to draw a line here. We actually closed exactly at the same level right here. The Tuesday's high is exactly where we closed yesterday. But we push above the side and above the side as well. Whereas our main drawn liquidity here is going to be previous week's high as of price liquidity, or eventually that 107.34 level. So based on this information, what do you think, is today bullish or bearish? Today, guys, I am simply anticipating a bullish move, where to at least to check out yesterday's high or eventually to last week's high. I'm expecting a continuation higher to these levels over here, simply because we believe on a weekly chart we are bullish, and here what we see here, we already formed the low of the week. So in other terms, let's look at this thing. Where's the opening of this weekend? This was Friday, this was Monday here. I'm just going to drop a line here and show you something else. This will be opening price here. This will be on Sunday, right? Okay, here it shows Monday open price open here. Let's go down for our chart here. I want to show you something else here quickly, but I'll go back to our chart frame. What do you see here? Let's look at this thing even on our hourly chart. what you see here, we open right here within this gap, right? We open within this gap on Sunday. And we are bullish. If the weekly candle is bullish, how do you explain a weekly candle form? If it's bullish, going to be open, manipulation lower, then you want to get a long way on the distribution phase. Do we see the same thing here? Yes, we do. Look at this thing. This was the opening price, right? And then this was the accumulation here of the week. After accumulation, manipulated to the downside, manipulation, and now we started doing what? Distributing higher the distribution of the week. This is where the money is. So now we push high to this level now, which means today we are pushing XY or push the dollar. We can still get a chance to go long the dollar here. So with this being said, so if we are bullish today, where's price headed up to now? We are headed to this high, 107.34 level. So now let's break it down. Let's look at for our chart now. Oh, this is a thing of a beauty now. This right here is a thing of a beauty. Let's look at this thing up here. This thing and this. This right here is a daily fair value gap. Remember that daily fair value gap here? We check into this daily fair value gap. Low stop and push higher now. So which means now we now have a link range with this low up to a time. Premium discount. I don't really care about premium discount most of the time, but I do mark it from time to time. With this range here, discount and premium, we check down into what? Into discount here. Expecting what? Higher prices. Good. Something else that you can also use in for our chart. Let's look at this thing. Let's keep it simple. What do you see in this case? We have a low here, a high, a lower low here. Displacing high and making this uptrend candle a breaker. If you use the wick as well, then perfect. What do you see here? We have a fair value gap and a very nice fair value gap here. A discount fair value gap. We check into the fair value gap now. Again, we are bullish. Remember that? And this here, order block, we didn't check into the order block at all, but we are bullish. We only check into a discount area in this case, happen to what? Happen to this fair value gap. So we're expecting what? A continuation higher. And one thing I love, what we see here, displacement and failure to displace. If this 4 hour candle, it pushed below the previous candle's low, but if it closes just above the low here, this will indicate that okay, the next 4 hour candle will be bullish. If the next 4 hour candle will be bullish, which means absolutely, then which means the Hensha London session, it means we are bullish DXY, which means I'll be going short euro, I'll be going short pound, I'll be going short Oz, I'll be going short Kiwi. What about gold? Ignore gold, because lately it's possible that we might see bullish DXY and also be bullish on gold at the same time. So I try to do the gold based on what I see on DXY. Okay. So now we end this on the 4 hour chart. We are bullish to this high and this high here. The question now is how do we take advantage of this move? It's simple. Just counter our range, tag into it. 4 hour, move down to 15 minutes charger. If we have this here on DXY, which pair do we go long? We can go long Swiss franc, we can go long USD CAD, we can go short USD, GBP. So what am I looking for here in this case? Simply we have this down close candle here, right? That took out this previous low here. I want to see price closing above this. This will be what? A change in the start of delivery, or aka high probability order block. I want to see price pushing above this, the opening price of this candle here. Then I'll be using it as what as our change of state delivery. We'll be looking for longs on GXY, anticipating what? Higher prices. For those who are trading market maker models, we have the sell side of the curve. Now simply starting with the buy side of the curve, and on the right here, simply gonna be the smart money reversals. What do we see here? What else is here that we can talk about? Let's break it down. Let's look at the midnight opening price here. Where is it? Okay, 20, 21, 23, right there. We are trading below the New York midnight opening price. We're above it now. We push below first. This is going to be New York opening price. Let's look at where in this case. Let's look at 6 p.m. here or the entire New York session risk right here. Look at this. The Asian range has been taken out to the downside as well. Sensor liquidity is swept, as well as this low over here. Swept right here into the 4 hour fair value gap. Asian range taken out as well. Well, expecting our price to push on our way to this buy side. We are bullish DXY. Simply just by using all of this method, guys, you can be able to get to a point where you know you have a proper bias for the day. And a bias on its own, guys, doesn't necessarily mean anything if you're going to get a timing of your trades wrong. So when is it the perfect timing if you want to take perfect trades? The perfect timing is always going to be within the kill zones. In this case, London kill zone from 2 to 5, or New kill zone going to AM session that will be from 7 to 10. Within those kill zones will be the perfect time for you to get into the source. Look at it again, guys. Instead of daily chart, and we're down to 15 chart. Let's look at euro now. Daily chart. When euro, we were bearish yesterday. And yes, we got a bearish day as anticipated. But here's the key now. What about today? This is approach the same methods. And here's something that I love so much about this here. I'm going to show you. I'm going to remove this some other things tools here. This by side, all of this here. I'm going to remove this here. Let's look at this thing here. The same thing. Let's look at the same approach that we used on DXY. We start where on a weekly chart. On a weekly chart, we were heavily bearish, right? Expecting this week to be a bearish week as well. So which means if we are bearish for the entire week, we want to see opening price moving above the opening price as what as the manipulation. Then we trade the distribution to the downside. We trade the distribution to the downside. That's the first key. In this case, we look at the whole week. Our weekly bias, we are bearish. Where to this level, right? It's gonna be what 1.0448. I remember I talked about this when we were looking at what we were looking at the first market preview on Sunday. So we are bearish in this case to these levels. What's the next thing that we're supposed to do now? We can go down to daily chart here. What do we see with daily chart now? Let's change this up again. For the daily chart, we simply want to focus on interest. I'm gonna draw some lines here. This is gonna be the high of this. I'm gonna make the sign so a bit bigger here, so it can be visible. And you may be saying, oh, but this price closed above the favorite gap. Yes, it did. This is where I want to draw some lines here and show it to you, right? Look at this thing here. We have this sell-side balance price and efficiency right here. We checked into it, took off, came back to it, and closed above it. The next candle closed above it. But yesterday here, remember yesterday bias, we were bearish. Why were we bearish yesterday? Because here's the key here. This is the reason why we were bearish yesterday. Same reason why we talk about DXY. But let's take a look at yesterday here. Yesterday, push above this high and this high here. In this case, checking out buy side liquidity above what? Above Tuesday and Monday as well. Buy side liquidity was taken out here. Smart money pairing their short orders with this buy stops resting above these two highs. However, took out these highs but failed to close above it. Let me repeat again. We took out the highs but failed to close above it. Actually, went straight to the down. Where to? Look at this level gap. Push above it, into it. Then huge move closing below it. Indicating now if price comes back into this case, we can still push lower. But I'm not expecting that. So which means to the downside, this thing here, the fact that we are rejecting off this level and pushing lower, it supports the action that we have on the weekly chart that we are bearish, expecting what? A bearish week. And this here, the fact that we push above this high indicates that, okay, this high here or yesterday here on DXY, in Europe, this high here is what? The high of the week. And on DXY, however, which means the low of the week was on Tuesday. If low of the week was on Tuesday and high of the week is on Wednesday, this indicates that we have what here? We have SMT. Ooh. Did you see that coming? No. We have SMT here. Because on DXY, the low of the week is actually on Tuesday. So which means here, however, this price are almost close to the same level, so not that clear to see, okay? So we have this thing here. So what do we do today? Yes, this candle on its own alone suggests that we should be expecting a bullish day. However, because we are in line with what weekly chart as well, so let's align these two things. Weekly chart suggests that we are bearish, but over here on the daily chart, because the fact that we failed to close below this level, so actually indicate should be bullish. However, let's go to for our chart. Now we want to stick to 4 chart and time frame alignment. Let's look at this thing here. Let's look at the weekly chart. We are bearish. Time frame for our chart. Let's break this thing down here on this world. Okay, even if we put it, we still have SMT there. Let's break this thing down based on this 4-hour chart here. Where's the midnight? Okay, I'm going to talk about this. We have this high here down to this level. In this case, we didn't push up into premium. Don't forget, on GXY we did. On dollar index we did. Let me show you something here. On DXY, this low right here, the 11 o'clock candle took out what the 7 o'clock candle. Here on Euro, the 11 o'clock candle didn't check out what the 7 o'clock. Wait a minute. Oh, not the 7. Okay. When you look at the 7 gap, I have 1, 2, 3, that candle here. 2, 1, 2. This that 5 gap is actually this here. Okay, but let's focus here on no worry, no need. Okay, let's look at this thing here. What do you see? You have this high, this low, and the fact that on GXY we push into premium, but here on Euro we didn't push into premium. This indicates to us that here and don't forget we have this 5 gap on dollar index, right? Euro didn't check out into that 5 gap, indicating that we do have what, looking at these two candles here, we have SMT as well here. So this indicates that, okay, looking at Euro is the weakest, so which means there's a very good chance that at sell side we'll be looking for a chance to do what, to sell Euro more than anything else. So I'm not anticipating Euro to push into premium here today. Let's put on some proper lipsticks here. So for those that truly or fully understand this whole thing here. We have this order blocks here on the forward chart. We didn't check into the candles here, but however, we can use the wicks if you want to. You can use this candles wick here. Look at this right here. Bearish OP to the peep over there. Bearish order block. We have SMT with DXY here. And again, this high has been declared, this high has been declared by sell liquidity. Been checking out here. Let me just use this here. Oh, my bad. I'm gonna put on some proper lipsticks here, guys. This will be by sell liquidity checking out over there. Then we displace lower. Breaking below this low, this will be what, a 4-hour market style shift. Look at this. We have a high, low, high, 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 low, high, 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 low, high, high, boom to the downside, a lower low. So once we have a lower low here, in this case, making this down close candle here what? A bearish order block. This up close candle here making a then what? A bullish, a bearish order block. So which means now what do we have here? Let's remove this. Making this down close candle here. A 4-hour bearish breakup block here. Up close candle, a bearish order block. How does it look now? Good, not bad. So this is the price that we have. We push lower to space, making this a 4-hour market structure shift here. Back into the breaker. Order block as well. We have SMT with DXY here, so which means now what are expectations? We're simply anticipating lower prices from here on. Again, look at this. We checked into, did we check into this provisional block here? Not really. Look at this. This is gonna be the block. We didn't check into it exactly over there. It's not we didn't check into it. So in this case, from here on, I'm simply expecting what, guys, lower prices. Let's go down to hourly chart. What more can we talk about on hourly chart here? What do you think we should be paying attention on this thing on our chart? Let's break it down. Let's break down our chart here. Let's look at this. I want to mark this will be what the New York midnight opening price here, and this will be opening price. We are now trading below the midnight opening price, right? Let's look at what the Asian rate. We didn't check out the Asian highs here. This is good. Okay? Let's look at 6 p.m. here. From here, the Asian high is right here. We didn't check out the Asian highs there. Compare, unlike GXY actually took out this high, indicating that what do we have here? GXY, we've checked out this low, right? But in Euro, we failed to check out that high, indicating we have what here? SMT. So am I still anticipating the Euro to push out to check out this highs? No. This suggests what Euro is so weak today, so I'm most likely gonna get a chance to go to do what? To sell Euro USD here. So what is my approach from now on? I am bearish. My weekly chart is bearish. My 4-hour chart is bearish. Hourly chart, I'm bearish today. We've taken out, in this case, we have SMT. I'm no longer anticipating price to push above the size. So which means now let's put on the proper lipsticks here on the hourly chart. Don't forget we have that SMT here. That's why. Let's move this a bit higher here. So a bit of it in the chart. Again, we also have SMT here. And for those of you who knows McLeod's forever model, this may be perfect chance for that model here. If you utilize that model, change the here, check into here, sell side, boom, that would be a good trade. However, let's look at this thing on our chart. We have this low, high, lower low, back into this high, where to, back into bearish order block here on hourly chart, check into bearish OB, fair value gap obviously here, and the fact that we close above it and quickly reject of this level suggests what? Bearish move from us. Expecting what? Bearish move, bearish day, dollar index, bullish, USD, bullish. And all these ideas, guys, started with what? Being able to identify simply your daily bias. And the key to daily bias, what we've been talking about over and over again, guys. I can go on and on and on. So now let's look at GBPUSD here. Or to show you that this thing that we talk about here is only, not only that it applies on USD or maybe on major currency pairs. Let's go to a random pair and I'm going to show you the exact way of determining daily bias. Lemma pair. Let's pick a random pair here. I'm going to pick what? Random pair. AUDCHF. Let's go on a weekly chart. Okay. I'm gonna stay away from this, guys. The reason why I'm sitting away on this chart is because we have this here. Last week was an inside week. But then no, let's do it actually. Last week was an inside week. Normally once we have this, I don't like doing this thing here, but no, let's go on with it. This in this case it was giving me no bias for the week, but let's look at the daily chart here. Oh man, this is nasty. Let's look at the daily chart here to indicate our bias, AUDCHF, indicating I want to find out the bias for the day here. So let's look at this thing. The first thing, what do we see in this case? With this low up to a high, then high down to this low here, which happen into the order block here, then the push high into this order block as well. So we're trying, okay. So what do we see here? What's our case? In this case, the best way, we don't have any daily fair value gaps that you can consider, right? We do have this one fair value gap here that we wick below it, but fair to close below it. Okay, that's going to be the case. Okay. But what do we see here? Something important that we see. Let's look at the previous three candlesticks. Let's look at yesterday here. Yesterday actually pushed below above Tuesday's high, but failed to close above it. And again, guys, this is key. The fact that we push above Tuesday's high and fail to close above it, that is key. Indicating, okay, today we should be expecting some sort of a reversal to the downside. And the fact that we didn't check out, in this case, we have this failure swings here, indicating what? Indicating what? A low resistance liquidity run. Draw. Is just draw and liquidity. So which means here AUDCHF daily bias, just by looking at this thing here, I'm bearish. What is supporting this? We have this proportional block here, bearish one, check into it. So which means today I am bearish. So if I'm bearish today, which means I want to see the opening price, I want to see price moving above the opening price. So which means that will be the manipulation, so we can be able to trade the distribution. Let's go down to 4 hour chart now and put this whole thing down. Ooh, look at this. What do you see on the 4 hour chart? Let's break this thing down here. Put in some proper lipsticks. I'm going to remove this and this. What do you see? Relative equal highs here. Buy side liquidity. Spot money. Pair national order stops above this highs over there. Boom, which is basically downside. Where to? And then this is scary here. This is scary, guys. This is scary here. Okay, because with this low, push down into the order block, push high over that side. Okay, no worries. However, we look at this with this high down to this low, premium discount, right? We obviously trading at premium here. What do we have at premium? Fair value gap. We don't have any market size shift here, and I don't like this. I want to see the candle check. Oh, very nice here. The candle checks out liquidity in this. It is this upper scan here, as a picture, which means here a break below the scan here was actually what? A change instead of delivery. Can price push into this level? Yes, it can. If it checks this level, right? If you push to this level, we'll be looking for it just to go short. That's how simple it is. For our short, go down to 15. So which means now the next 15 minutes, what are we? Bullish way to this. Oh, look at this 50 charter. Exactly change the delivery. And expecting price to turn back up into it. Then it melts. That's how simple you can trade daily price. In this case, however, I didn't use anything that we have on our arsenal, but that just was the simplest way of telling your bias as well. If you're with me yesterday, I believe you remember this setup here. We did talk about this in the session. Let's go to GU here. And I'm going to give you, this will be the last IJ, guys, on determining daily bias, right? This will be the last IJ. And this one is so simple, guys. This one is the simplest out of all the pairs that we did today. This one will be the simplest one here. Let's remove this. Let's look at the daily bias here. What do we see? The first key to tell our daily bias, or the most obvious thing that we, so I'm going to do this here. The first thing that I use to determine daily bias, I'm going to be looking at the weekly chart first thing here. Weekly chart is that I was bearish this week, anticipating lower prices in this case because this week was a huge bearish week. This week indicating, okay, we are bearish. I want to see price opening and close below this week, right? That was the first thing, or the first key, or the first idea that we are bearish for the week. So if I'm bearish for the week, I want to see price open end of the week, push higher, in this case, a move above the opening price. That is actually what? The manipulation of the week. So we open here, push higher, manipulating high, and we are bearish, which means now we actually doing on starting the distribution phase of the week. Let me just show this thing again. I'm going to do this here. Drop a line here. Let's go to hourly chart. Let me show you this. Where is the opening price? The right here. This is the accumulation. This push higher is the manipulation. Now we're actually starting what? Distributing higher. I normally put this thing in colors, right? Most of you know this. This will be the accumulation phase. This is the manipulation over here. We are now doing what? Distribution to the downside. Put in what? In green. Based on the weekly chart. So let's break it down here. Let's look at the bias on the daily chart. Let's start here. Daily. Let's look at the previous 3 candles. We look at yesterday here. We look at Tuesday and Monday. Tuesday pushed above this high there, even above Friday's high, but failed to close above it. That is key. We pushed above this high there, but failed to close above those highs, indicating we simply buy checking liquidity. We didn't close above, indicating, okay, the failure close within this case, indicating, okay, we are bearish, and today we are simply expecting what? A continuation lower. So if I'm expecting continuation lower to downside, why am I, will be my drawn liquidity? The first key level here will be yesterday's low. Second level, Tuesday's low, or eventually last week's slow. Bearish move, bearish week, bearish day. Well, weekly chart, bearish. Daily chart, bearish. What about the 4-hour chart? Let's break it down now. So this low, high, right here. Check out buy side liquidity here into the constant encroachment of this week here, or to over there. That of this week here. Checked into it here. We met into the downside. This here, actually yesterday, indicating we are bearish from here on. Let me show you the setup here. Show the chart. Let's see if I can get it. Did I check the chart, guys? No, I didn't check it. Okay. There was just a setup indicating an IG that I see that has a huge potential, but because it's outside of maybe I don't have any playbook about this, so there's no way for me to check the chart. This one I'm looking for is this chart here. GBP USD. Here it is. This here was yesterday's session, indicating that GU from here on we should be expecting what? Lower price. Where to this low here? This low happened to what? Last week's low. This was over. It's like more than an R setup, so but I didn't check it, guys, so don't worry about it. Yes, 14.16 R. I didn't check it. Okay, so weekly chart we are bearish, daily chart we are bearish. What about 4-hour chart? We are bearish in this case. We have this range high here. Down to this low, premium discount. In this case, we don't have anything that we can use. Let's look at the hourly chart here. See if we can have something here on this hourly chart. We have, okay, hourly chart is even better. What do you see in the hourly chart now? Look, we have this high, low, higher, low, high, then boom to the downside, yeah, high, low, then price went back to the upside. We didn't check into the breakout or anything like that, or order, because the smooth to downside is so strong in this case, indicating it's not going to return back up to these levels. We simply push back up here to what? Mitigation block. We didn't check into it. Only the week as of this mitigation block here. Check into it. Measure the downside to come back to this level. So what we see here, hourly chart, this, remember on DXY, we have checked out the Asian sessions high. However, in this, on Euro, we failed to do so as well as GU, indicating that there's a very strong momentum to the downside. So what we do, which means here, this also indicates that compared to DXY, we have an SMT here. Remember, it is this SMT here that we were talking about, because on Euro, we have checked out the Asian low as well as the previous. The Asian low has been checked out here on GU. We didn't check out the Asian low. Asian high, sorry. So which means this to me indicates that we are and not going to check the exercise at all today. We're simply going to do what? Price will simply continue to the downside, indicating where to, at least to this relative equal high lows here. This will be the drawn liquidity, sell side liquidity, expecting what? Simply a continuation lower. And guys, this is how you simply determine your daily bias. This will mean that opening price there, we are already trading above it. However, here's the key here. There's something that I love about this, because we know we are the AMD traders, right? Which means we trade what? Accumulation, manipulation, and what? And distribute. Look at this thing here. We opened here as accumulation, then we manipulated higher. In this case, we failed to check out the Asian sessions high here. However, on DXY, on dollar index, this move higher here, it actually did check out what? It actually did check out the Asians range on UA. Here on dollar index, this low, this moved to the downside. It took out what? The Asians low. However, euro, we failed to do that. Here on GU, we failed to do that, indicating this a very strong momentum to the downside. So I'm not expecting price to run higher. I'm still expecting what? A continuation lower. So which means today is going to be perfect for what? Today will be a perfect day to trade, simply trade what? A continuation model. Are you with me still? So in this case, we're simply expecting what? A continuation to the downside, guys. Yeah? And that's how you tell your daily bias, weekly bias, daily bias, even what 4-hour bias, and then that leads you down to even to 15 chart right here. Easiest way of getting your bias. Again, there are a lot of things that we can also incorporate, but I didn't talk about today. I didn't talk about inter-region liquidity to Excel. I didn't talk about that. We're simply focusing on the week. Today I was simply focusing on the weekly, high of the week or low of the week, and as well as simply looking at the basic candlesticks patterns. So guys, that's what I want to show you for today. That's why I believe this has been informative. I hope so. And if you do have any question, you can just ask questions. You can just send me a text any given day. So for now, guys, yeah, that's what I want to share with you. The key to daily bias. And I didn't share a lot of things there, but I wanted to keep it simple for you I was just trying to simplify it for you guys so we can easily understand it. That's all from me on this one. I'm going to see you guys on the next one. Cheers. I'm out for today.